Good evening, everyone, and welcome to Crypto Pulse Weekly. This is the last edition for this season of Crypto Pulse Weekly. So, as I promised last week, I'm going to make it very quick because obviously the clips are going on Reels on Instagram. So, I'll try as much as possible to make it very short and brief. The first thing I want to talk about is the issue of the orb that we were talking about last week for retina scanning. That people are being told to scan their retina to collect WorldCoin. As it turns out, they've not really tried to do it in I would say in the Western Hemisphere, because as it is, they're not asking people in the UK or the US to do it. But I found out during the week that quite a large number of people signed up in Kenya, and they were promising them, cryptocurrencies for scanning their retina. And like I said last week, I think it's a major privacy risk, and I think retina scans will become more common. Of course, I read in the news today that the company behind that technology is planning to open source it. So retina scan will become just like fingerprint. And what I was saying last week was that the danger in scanning your retina is you can't peel off your retina to change the configuration there. So whatever is scanned in your retina is as good as your permanent ID. Like I explained last week, if you peeled your fingerprints, or if you injured your finger in any way and it damages your fingerprint, the next one that will grow will not be exactly like the one before. So the pattern will be different. So, but in the case of retina, you can't change it. I mean, it's not like you can just pull out the retina. So the warning is still out there, and the fact that they came to Africa to test run it speaks volumes of the possible nefarious activity that they might want to conduct with that data. Like I said, in this age of digital economy, data is money, and it's very important that we're aware and we're intentional about how we use our data and how we give our data. Data is now equity. Essentially, data is money. So you can't just give your data out anyhow. And somebody actually on the call last week was asking me that he doesn't think it was worth, no matter how much token or crypto they wanted to give the people that were signing up with their retina scan, that it wasn't worth whatever money they were going to give them. I said, yeah, yeah, yeah. That even if it was worth it, the unintended consequences of that is that that data can be sold. And like I gave the example last week, when Facebook came, we thought it was a very interesting technology, and it was going to allow us connect with our friends, and we gave all our data happily, and we were able to connect, and the excitement went on for a while until it turned out that they were just mass selling the data and using it for targeted advertisements. Now you can't talk about anything on your. I mean, you can't talk about anything again and not seeing it in your browser or see it pop up on your phone. Anything at all. You can just try it if you have an iPhone or maybe one of these smartphones. Start talking about something. You will discover that your feed on social media and your browser will start popping up with those things. It's not magic. It's because those devices are listening. As a matter of fact, there is a setting now on your Google, the updated Google Terms, that is automatically ticked that you allow Google to listen on your device. It's on the computer as well. So even if your mic is not on, Google is listening on your device uh, at all times that the device is on. So the reason I've gone to explain this is that it's very important that we're aware of data implications, identity theft, and data violation and breaches. So there's a lot of violation issues already with that WorldCoin saga, but obviously they've gone to Kenya, and as it turns out, I found out that the Kenya authorities decided to look into it, and that the company is not even registered in Kenya. But again, I don't know how it will pan out. And like I said, people are already um, people are already using what's it called, their palms to pay. So right now, there are two technologies actually. One is that it's just the same way you do the retina scan. You can scan your entire palm, and then the machine registers that palm with your face, and then it asks you to link your payment card. So what then happens is, I think that documentary was in China. What then happened is that palm, the topography of that palm and the print is linked to that payment card. So every time you get to the machine, all you have to do is just put your palm there. Once it scans the palm, it opens the door. So it's already happening in terms of biometric and bioengineering as access control. But what I'm saying is people need to be careful in terms of how we volunteer our data, because you never know. You never know who will have access to that data. And people give data in good conscience, thinking that the people collecting the data are going to do a good job in safeguarding it. But as we found out with Facebook and with every other major data holder, anybody pretty much can get that data, and there is no end to what can be done with that data. So please be very careful about people asking for retina scan to give crypto. It's not worth the venture. Um, Let me talk about the chat briefly before I take questions, because I plan to spend less than 30 minutes today. As today is the last episode of the season, I plan to make it very short. So in terms of the outlook has not changed from what I said last week. That it looks like the market is a bit exhausted in terms of pushing price beyond 30K. And on the macroeconomic side, there seems to be a problem, because if you probably listen to the news during the week, the Bank of England just raised interest rates again for the 14th consecutive time. And I was talking with someone today, and was saying that they actually still have they under the law they have ability to still rate the interest rates twice this year. Now, to explain what this does, once they raise the interest rates, it's in the short term it strengthens the currency, because it means that people who are putting money into treasury bills and bonds get higher yields. But what it means is that the cost of capital goes through the roof, both new cost of capital and existing cost of capital. So people who are, running companies and have, gearing or leverage to maybe 1 to 5 on their operating income and cash, they sort of suddenly find themselves in a situation where they can't run business anymore because they really can't afford to borrow at that rate. Or even if they borrowed before, the cost of borrowing has suddenly doubled within the year. So what that means is that the real sector will slow down. And once the real sector slows down, automatically it affects the housing market. Like, I mean, people house price have stopped growing for the first time in I don't know how many years, even here in the UK. So it's already affecting the housing market. It's also going to affect existing homeowners with mortgages, especially people who have tracker rates, who their mortgage is floating, and people who are just getting changing their mortgage. It's going to affect them as well. So because of that, I suspect. I mean, I'm not trying to be as usual. I'm not trying to be a conspiracy theory, but I suspect that the way they are going about this inflation control might actually push the economy, especially the UK economy, might push the economy into a recession. Uh, Even though the analyst says recession is not likely, but if the housing market stops growing and people start to default on their loan, then there's big problem. There's big problem. Once that happens, there's big problem because automatically what it means is the GDP will start shrinking, and before you know it, the economy has taken a hit. So at the back of my mind, I'm thinking, okay, these guys are still going for it. That's in the name of trying to control inflation. They're still, increasing the interest rates. But what this does is that it puts everything else on the edge. So all the economic activity that's been booming across board, all of them now will start to stall because what it means is it's seriously too expensive to borrow. If the companies and the service providers go ahead to borrow at this high rate, what it will mean is further price hikes. I mean, we already have price hikes for everything, all over the world. So I think that this inflation control measure might actually push, in a reverse engineering way, push the economies into a financial crisis. Uh, and it gives me a lot of worry because there is war going on, as you know, in Europe, and there's another one brewing in in West Africa. I just pray that people don't get crazy and start a war in West Africa because it will just be a proxy war. In which case there will be, I mean, like most wars, there will be no winners. A war between Nigeria and any ECOWAS country is a failure at this point because not only are the people too impoverished, the economies themselves are not doing well. So there is no sensibility for anyone trying to, engage in any act of war at this point in time. And because the French are in a panic mode because of the seeming alliance that is forming within Francophone West Africa, uh, they're trying to go through the back door to push AU and ECOWAS to get into some sort of conflict. I don't think it will all go well in any way for the region. But I pray that you know God will talk to their mind because it will be mental to try to go into any war now with the way things are in Nigeria and in the region entirely. So there are too many things that are unstable right now, and the only thing that seems to be going well is the US dollar, which is very crazy because it's only going well because they've. I wanted to show you the dollar index. It's only going well. Oh, it's even dropped now. It's only going well because they've hiked the interest rate significantly, and also because they didn't push the interest rates higher like the Bank of England did. I think it's just it's taking a breather right now. But really and truly, I think that we are close to a financial crisis. I'm not trying to be a prophet of doom, but they've pushed these interest rates too high, too fast, and within a very short period of time that it's becoming very worrisome at what the possible. And if you're talking about it from the point of, I'm sorry, I'm not talking about crypto primarily, but if you're talking about it from the point of looking at it from the point of an economist, that is what they should do. They should try to bring down inflation so that there is no chaos. But in trying to bring down that inflation, the unintended consequence is that, of course, the economy will suffer. And for an economy like the UK's that is still reeling from Brexit, I don't know whether that's a good idea. But how does that affect what's going on in the price in the market of crypto? Two things. Like I said last week, we need to take a correction for the price of Bitcoin. That correction can be as low as 26,000 in the short term, because that was the recent low. It was 26, yeah, 26, 25,000. That was a recent low, and because so I'm showing the 3 days chart, but if I go to the daily chart, it sort of explains that. I was explaining last week that because of the market inefficiency that happened between June 16th, middle of June, to 22nd, 23rd of June, the market always has a way of correcting for that inefficiency. Inefficiency means the price just goes almost vertically. So when you see that kind of inefficiency, or there's a gap, usually there's no gap in the price of Bitcoin on most exchanges because there's liquidity, and it's not like the Chicago Mercantile Exchange, the CME, where they don't trade on all these. So usually, because the crypto exchanges trade 24 hours, there is no gap in the price when you look at the price chart. But if you look at CME, you see a gap sometimes, and almost invariably that gap gets traded, because what it means is that nobody bidded for the commodity at those prices. So in the same way, when you see the market go suddenly, I mean the price goes suddenly up, like the Yoruba proverb says that what goes up comes down. It's exactly the same thing. It might take a while, but eventually it's going to come down, and that's exactly what I think it's trying to do. So it's still hitting on 29, and there's still possibility that it goes back to 30, but eventually and inevitably it's going to come down to 20, 26. Then 26 is my bet that it will come down to before going upward. If it breaks down from 26, then we can be looking at more sinister prices like 20k. But before then, except something bad happens, like maybe Binance goes into insolvency, which is not, I mean, which is a very blue swan event. I don't think the price should, or maybe there's another additional war or a nuclear war or something. Those are the only scenarios in which I see the price crashing that rapidly. But I think for 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 the market structure that we have right now, the price is expected to go back to 26k in the short term. And like I said, because in fact, it's even more, it's almost like it's confirmed, actually like a triple confirmation now that the price is going down. We have like three different bearish engulfing candles on the chart at different intervals. So this is a definite pointer. If the liquidity is not strong over the weekend, then it might be dropping down very quickly. And I mean, bear in mind that this is summer or summer holidays. So summer holidays affects the market as well, because most of the institutional traders, they usually make most of their money before the second quarter. So they go on vacation and then they come back to disturb the market in September. So I don't think there'll be any significant movement. Even if there's going to be movement, it's likely going to be downward, because the market makers will be largely on leave and they won't be around to move the market. So the price is not likely to do anything fantastic over the next, how many weeks do we have left? Over the next 3 weeks, yeah, over the next 3 weeks. So what does that mean in terms of taking position? I think it's important for people to hold on at this time, because you don't want to be buying at the tip of the market, and you don't want to be holding the bags unnecessarily. So, and we've discussed this, I think we discussed this like 2 or 3 times this year, that we are at a price range that has defined the market for the last 3 years. So the expectation is explaining many days ago or many weeks ago that this range has been in force since 2021 January. Yeah, the 29,000 30K range has been in force since 20. That was the first time the price ever got to that level. So it's been in range since 2021 January. And if you plot a line across, well, either straight or slant, you see that essentially the price has been swiveling around it. So it's touched it multiple times before breaking down in 2022, mid 2022, and it's not been able to stay so significantly above it. So I think that we might see some correction before the price moves significantly to the upside. And because, like I said I think at the beginning of the year, that next year is halving, in which the price of Bitcoin or the cost of producing one Bitcoin will increase by double. That's what halving means in economic terms. Once the production rate drops and the price goes up, the gas fee goes up, automatically the price will go up, because then miners cannot afford to sell at a loss for long. So they will have to, invariably, they will have to increase the cost. So in line with what I was saying earlier on, yeah, 26K is what it looks like, because there's also a trend line here that's built from the price rise in January this year. So 26K is in order. And the fact, in fact, that there are so many things that makes this upside still delayed, because the original structure that the price was going in is something you call an ascending triangle, and ordinarily you should have had a push to the upside that will have blasted through significantly to maybe like 40K, but that hasn't happened. So chances are we'll see 26K. Definitely we'll see 26K, but chances are we can see 20K. But that's really far fetched. If it goes there, there will be a lot of liquidity to buy by so many market makers. So I don't think it's going to stay there for long. I mean, if you are very patient and you can make pending orders, at 20K. It's a good spot to buy. The last thing I wanted to say was about people in the US. I think regulatory constraints are going to increase in the US until there is a spot ETF for Bitcoin. So there have been many applications. The biggest one is BlackRock. Like I said, BlackRock owns everything in the world, everything of value. You'll find BlackRock as a shareholder. So BlackRock is the biggest. They're the biggest guys, and for them to be filing for a Bitcoin ETF means they are seeing something and they want a massive piece of the pie. So if that ETF gets approved, I don't think it's going to get approved anytime soon. They'll probably drag till next year. If we get approved next year, anytime next year, the price is going to go crazy. So if halving happens, then the ETF gets approved, then we're going to see some very crazy. I mean, literally, I don't think Bitcoin will be available for the common man anymore. It will suddenly become institutional grade privileged assets. So in the long term, this region is still a good buy in the long term for Bitcoin. But in the short term, I think it's near a local top, and I think it's due for a correction. Just judging off how it's behaved off this trend line, it's bounced here once, it's bounced here twice. So another bounce is due over the next few days or the next few weeks. And when that bounce happens, depending on whether it happens in September or it happens at the end of the month, if it happens in September, then the liquidity providers will be a lot more around, and they'll be able to push the market. But if it happens before then, chances are we might have some significant dips before we really go up. And something very funny is that there's a divergence. So there's a principle called divergence, in which the oscillators are making lower lows, or the oscillators are going in one direction and the price is going in another direction. What it means is that there's a disconnect between the price and the momentum of the oscillation of the oscillation of the price. Anytime it happens, usually it signals a reversal. The larger the time frame that it happens, the bigger the reversal. So I see that divergence happening. So I can show you. It's happened on the daily charts. So this is a 4 hour. This price was going up here. At the same time, the price was going down here. So when you see something like that, this is very plain, I mean, schoolboy stuff. This is very plain divergence. A sale at this point will bring the market to at least, yeah, 25K. Interestingly, on the 4 hour chart, it actually looks like more like 25K than 26K. So when you say divergence on a big time frame, it's almost a self-fulfilling prophecy that the price is going to take a correction and make a reversal. So because of that, I'll be very careful getting on the market to buy anything now, because in all likelihood, there'll be a drawdown. And when it draws down, I mean, when the price of Bitcoin draws down, everybody goes down with it. So that would be my advice in terms of taking position. I think it's a good time to hold on until this correction happens, because what then happens after the correction determines the cost of the market. If it breaks down completely below 25K, then 20K will be the savior. And if there is no economic event, then maybe the price will recover. But whichever way, I will be personally waiting to see how this pans out over the next few days and weeks. So I think that's all I'm going to do today. If there are any questions on Zoom, please unmute your mic and ask your questions. If you have questions on Instagram, just type it in. I will take the questions and answer them. But that's all I'm going to do today, because I'm trying to shorten the time for the clips, because it's going on Reels on Instagram. Albert, do you have any question? You're usually one of the people that has questions. Okay, no questions.
Doc, there was something on my mind since last week, but I've forgotten about it. I just came from work, and
Okay.
I think if I don't still remember, so then it means probably next week. I hope next week you are coming. Or
yeah, no problem. Or you can ping the group on WhatsApp, and I'll respond. Yeah.
Okay. All right. Thank you very much.
All right. Thank you very much, everyone. We'll see you again probably once before the month ends. But it will be a lot shorter. As I said, I'm trying to reduce the length of the clips, because of the way it's going on Reels, so it doesn't take too much time. Have a lovely weekend, everyone. And
Doc, excuse me, just a quick one.
Yeah.
Why is it that events that happen in the US market tend to affect Bitcoin? Why not any other markets, any other country, but it's only US? Because always it is the US market that affects the price of crypto in general. Why not any other market too?
Okay.
Thank you.
So let me answer that question. So before 2015, the price of Bitcoin was not really affected by the US. It was the price of it was activities in China that affected the price of Bitcoin, and that was because 80% of the miners that were mining Bitcoin at the time were mining in China. And the reason there were so many miners in China, as I've explained, I think I've explained before on this channel, was that, you see, there are a lot of billionaires in China, thousands of them. However, there are only billionaires in Chinese yuan, and they cannot take that money out. So the government doesn't care if you become rich and wealthy and, become a billionaire. Even, not just billionaire in, yuan, they are billionaires in dollars, but they can't take that money out of the economy because of the capitalist or neo-capitalist, no, not neo-capitalist, neo-communist setup that they have in China. So when the rich guys started finding out about Bitcoin, it gave them opportunity because what it means was that they could warehouse their wealth in Bitcoin, move it to a safe wallet and escape, and then come out of China to come and splurge, which is what most of them can't do. So because of that, China was originally affecting everything that was happening to the price of Bitcoin was coming out of China. But in 2017, when institutions first found out that Bitcoin was gaining ground, before everybody thought it was nonsense, it was gaining ground along with Ethereum. Then the venture capitalist guy started buying into Bitcoin and started buying into Ethereum. And they started taking up market share in terms of the overall market capitalization of crypto. And what then happened was, little by little, they started influencing the decisions, major decisions, not just on Ethereum network, but also on Bitcoin network, because in 2017 was when you had that major fork that broke Bitcoin into Bitcoin and Bitcoin SV. So Bitcoin SV was the pristine and primordial network for Bitcoin. But because they wanted to, I can't even remember what the update was then that they wanted, I think it was block time or something. They wanted to make a change to the network. So they got the miners and the, sorry, what do we call them now? The node developers. They got the developers to vote. And the majority vote was that they needed to upgrade the Bitcoin network to allow for, I can't remember that particular upgrade, but that particular upgrade was what split Bitcoin into Bitcoin and Bitcoin SV. So the original Bitcoiners who were stuck with the Nakamoto vision decided that they weren't going with the new Bitcoin. But the new Bitcoin now allowed the institutional investors to play in Bitcoin, because what it then means was that they could put in much more money based on what they wanted. On the back of that was what happened in 2020. Was that 2021? I think it was 2021 when Bitcoin shut down all, China shut down all Bitcoin operations, mining operations in the country. And the reason they were shutting down Bitcoin miners then was because, like I said, they were using it as a conduit to get money out of China, the very rich guys. And also, the Chinese government was trying to introduce their own central bank digital currency, which they had built. I think they had built it as at end of 2020. So they were trying to push that narrative into the Chinese economy, and Bitcoin was standing in their way. So they outlawed Bitcoin mining. So what then happened was miners had to pack up their equipment and move into neighboring countries like Kazakhstan and all the rest. And at that point in time, venture capitalists and private equity guys reached out to many of the miners, bought their infrastructure, and then brought it into the US. So right now, the balance of power for mining is sitting in the US, because that ban on Bitcoin, it took Bitcoin maybe 3 months for the hash rate to go back to normal. And in those 3 months, they've moved a lot of infrastructure from China to the United States. So now there's a lot of institutional vested interest in the price of Bitcoin, both in mining, and that's why you see Biden increasing tax on mining Bitcoin in the US. So there's a lot of institutional money invested in it. There's a lot of what's it called? Private equity and hedge funds that are interested, and that's why they are clamoring for the spot ETF. Then you have people like MicroStrategy, which was what I wanted to say actually, that I forgot. People like MicroStrategy that are doing a Bitcoin play with their excess cash. So MicroStrategy is always buying. They just bought last week again about I can't remember how many million dollars worth of Bitcoin. But what it does for them is that they're using Bitcoin as a balance sheet item. So anytime they have excess cash and the price drops, they buy Bitcoin. So by the time next year comes, MicroStrategy will have tripled their original value of their Bitcoin stash, and it directly tells even on the stock price of MSTR, the stock ticker for MicroStrategy. So US is always, not always, but significantly always going to affect the price of Bitcoin because of those vested interests. And secondly, because institutional investors are oscillating between US bonds and the equity market. Meaning, when bond is going on, big money moves into bond. When bond is stagnant and equity stock market is going up, big money moves back into stock market. When big money moves back into stock market, because most of the traditional investors associate crypto with technology, automatically crypto starts going up. So that's the intricate connection between the U.S. economy, the dollar, and the price of Bitcoin and crypto. Because as long as those guys are playing, and that's the current play, it might change in the future, but the current play is like Bitcoin is being treated like a technology stock. Essentially, crypto, generally speaking, is being treated like a technology stock. So what's happening is, because the market is strong for bonds now, and if you have like $1 trillion, you don't need you don't need more than 2% to be happy for a year, as long as your interest is greater than what you need to pass in terms of hurdle rates for the company. You can leave the money there. So right now, bond is probably doing like 5 or 6%. In the UK, I think it's 5.9 for 6 months. So why would anyone with big money want to risk their capital and put it in stock market when you can just put it in bond, keep it there and be watching it, and the money just grows? So that's the real connection. And that connection, I think, is not going to come down, because there is a strong play. I think there's a strong play for Bitcoin, especially in the coming months and years. I think there's a strong play out of the US. If you bear in mind that the stock, thank you very much, Bamba, 4.4 billion worth of Bitcoin, yeah. The Canadian exchange, what's the name of that? I can't remember the Canadian stock exchange. There was a Bitcoin ETF that was launched right in the middle of the crash in 2021, and people didn't sell off. Literally, all the people, 90% of people held their positions. So that trend is what I think is coming to the US, and it will only make the price of Bitcoin stronger in the long run, because people are realizing that Western economies are just printing money out of thin air. It's not from my mouth that you hear it, but that's what exactly is happening. The money is not based on anything. So everybody's being what was that word? We are being I've lost the word for it. We are being made poor every day, just by virtue of how the Western economies run the show. Because the print money is like you buy a token, and then somebody is issuing the token out every day, just like Dogecoin. You are devaluing the overall value of the currency, because you just print at will. So that printing that was done in COVID time is still we are still reeling from the effects. So really and truly, as long as the bond market is this strong, I don't think the price of Bitcoin will go up, and that's probably going to be sometime next year, when they've hacked the economy to death with interest rates, and the economy is tired of growing. At that point, they will stop, because what it means is that economic collapse is knocking on the door. So that's the tie-up between the US and the price of crypto. And of course, the US is the biggest capital market in the world. So it goes without saying that anything that moves there will move in the rest of the world. I hope I've been able to answer your question. I think I've over answered the question, but
Thank you very much, Doc. I think it's well explained. So
all right.
Bitcoin is so resilient that it cannot be banned.
Yeah. I think what will happen. So right now, analysts will say, okay, US is not ready for central bank digital currency. But as far as most of the countries are concerned, they already done the pilot in 2021 and 2022. They already finished the pilot for CBDC. So really and truly, they just need somebody brave enough to launch it. And in the days of former CBN governor in Nigeria, he did try to pull that stunt, but he didn't know that the Nigerian youth were way smarter and more advanced than the government in such matters. So nobody really nobody really bought into the e-naira stuff. But most of the other countries already trialed it out. They already have the pilots. Like I said, Bank of England is 2030. They are rolling out central bank digital currency. I think it will be one of the European countries that will go first. on the central bank digital currency stuff. Okay, somebody said, can you talk about bad AI? I just heard about bad AI today, Mamba. I don't know. I don't know what this is about. Uh, of course, like I said, if you remember what I said at the beginning of the year, and I've said it many times, that anything that has AI is going to make a lot of noise and it's going to make a lot of gains in this coming bull run. And it's simple. AI is the new trend in technology. So crypto or blockchain plus AI makes for very good marketing. No, I mean, no, no disapproval of anybody trying to shield their coins, but bad idea AI markets. I mean, this is a very funny con. Bad idea AI. I've not. This is the first time I'm seeing it. Well, today is the first time I'm seeing it. I just saw it about a few hours ago when somebody shared it on WhatsApp group. I would, like I said, I would hold my guns on anything crypto for now because Bitcoin needs to make that correction, and that correction has not happened. So why would you want to jump in now? When you're not a day trader. Like somebody was making fun of day traders that they buy when the market is going up. You can't be buying when the market is going up. What it means is you are buying the top. You are buying at an inflated price. So if anything, uh, a better entry will be when this corrects to like half of the current price, in my opinion. I don't know what the coin. I mean, bad AI is bad AI, bad idea AI. It's really likely not to be anything. Yeah, it's they've created bad decentralized experiments. An experiment is an experiment at best. Yeah, DAO plus Rim worthy concoction. Come on, guys. Anyways, yeah, it's AI, so it has AI in front of it, so it will pump. Um, I see some other ones you mentioned. Rio. I think I've seen this Rio before. Rio. Is it? Give me a second. What network is he on? Is it Ethereum or okay? It's on Ethereum. Yeah. Okay. When was this? 2020. 2020. Really? This was 20. No, I don't think this is a serious project. Personally, for it to really, it didn't. I mean, it didn't do anything in May. It just did. Yeah, no, no, no. Not a good idea. I could go into the details of why this is not a good coin, but I don't really have time to dig into that. And all the very low liquidity platforms. I've not seen this EKT. I've not seen this one before. Oh, okay, not a good idea. Okay, 2022 is it 2021 September 2021 was the peak. We've changed the contract address, migrated from version 1 to version 2. I'm wary of any project that does that. I'm very wary of them. And the reason is, well, I say I'm not going to go into explanations tonight, but but yeah, uh, I won't be comfortable with that token. Again, not to say that many of these things are not going to pump next year. Everything is going to pump next year. From current prices, we can safely say that everything is going to do like double current prices. Doge Chain. This is a spin-off of Dogecoin. When was this? 2020, 2022. Well, I will bet on Dogecoin over and above this one. This one looks like a meme coin. We're not in meme season, so I don't expect that we're going to get any. Wow. What's the tokenomics? 1, 2, 3, 500. Wow, 169 billion. No, 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 no for me. See, you need to make sure that your crypto portfolio does not exceed 100 token in the coming bull run. I think it's a wise thing to do. I think it's a wise strategy that whatever you do, you should not exceed 100 tokens. Once you've exceeded 100 tokens, in fact, I would say 40, but once you've exceeded 100, you've lost control. Chances are you might not make profits from the bull run. So, a word is enough for the wise. Thank you very much, everyone. See you again.
The more tokens you have, the more confused you become.
Absolutely, absolutely. It's almost like when you've beaten more than you can chew. Literally, you will not be able to manage, even if you have them on what's it called, trackers like CoinGecko and all that. It makes it difficult for you to set targets to sell, and as a result, you might end the bull run with so many tokens, many of which will never get back to the original prices. So, like I said, if you're already tracking your tokens, watch out for the 100 is a deal breaker for me. I will not go to 100 for whatever reason. There's no point. It's way too much. It's way too much to manage. And I mean, I understand like one of my friends would say that Dr. David, you have not told me about this coin. I want to buy private jets. I understand some people want to buy private jets with 1K, but manage your expectations. If you make a 5x between now and the next bull run, I mean, that's more profit than most stocks will do in a decade. So it's good to manage expectations, keep it small, and keep it focused. Otherwise, just be buying everything that's valuable and spread out yourself too thin. All right, everyone. Thank you very much for joining. Talk to you again later. Either I think probably in 2 weeks' time.
Thank you.
You promise coming out with some possible AI points. So
yes, I will still do that, but definitely not now. I'm not touching anything now.
okay.
Thank you. Good night.
Thank you very much.
Bye.